Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2025, and we're diving into the latest earnings report from SBC Medical, a global provider of consulting and management services to medical corporations. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. SBC Medical has just released their third quarter 2025 financial results, and there's a lot to unpack, from revenue declines to significant profitability improvements.
Revenue and profitability overview. Let's start with the top line. SBC Medical reported total revenues of $43 million for Q3 2025, which is an 18% decrease year over year. However, despite the dip in revenue, the company has shown impressive improvements in profitability. John, can you shed some light on this?
Absolutely. While the revenue decline is notable, primarily due to a revised fee structure and reduced procurement revenue, the net income attributable to SBC Medical surged by 353% to $13 million. This was largely driven by lower operating expenses, particularly the absence of stock-based compensation costs from the previous year. The adjusted earnings per share came in at $0.12, slightly below the forecasted 13.
Operational efficiencies and future outlook. Moving on to operational efficiencies, SBC Medical reported an income from operations of $16 million, 15% increase year over year. Their EBITDA also saw a 12% increase. What factors contributed to these improvements?
The increase in income from operations and EBITDA is primarily due to the normalization of their cost structure. The absence of IPO-related expenses and stock-based compensation from the prior year played a significant role. Additionally, the EBIT margin improved to 38%, up from 28% last year, indicating better operational efficiency.
And what about their future outlook?
CEO Yoshiyuki Aikawa mentioned that SBC Medical is focusing on sustainable growth by advancing multi-brand initiatives in the dermatology segment and expanding their business foundation in overseas markets. This strategic focus is expected to drive growth towards 2026.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of 30 cents based on a survey of 2 analysts. How did SBC Medical perform in this regard?
SBC Medical reported an EPS of 12 cents, which is slightly below the forecasted 13 cents. This once and miss can be attributed to the revenue decline, despite the significant improvements in profitability. It's a minor miss, but it highlights the challenges the company faces in aligning revenue growth with profitability.
Strategic initiatives and market expansion. Let's talk about SBC Medical's strategic initiatives. They've expanded their franchise locations and customer base significantly. Can you elaborate on this?
Sure. SBC Medical increased their franchise locations to 258, adding 34 new locations year over year. Their customer base grew to 6.5 million, a 14% increase, with a repeat customer rate of 72%. This growth is part of their strategy to expand globally, particularly in the US and Asia, which aligns with their focus on medical tourism and multi-brand initiatives.
Key takeaways. In summary, SBC Medical's Q3 2025 results show a mixed performance with a notable decline in revenue but significant improvements in profitability. Their strategic focus on global expansion and operational efficiencies seems promising for future growth. John, any final thoughts?
SBC Medical's ability to improve profitability despite revenue challenges is commendable. Their strategic initiatives and market expansion efforts are key to their future success. Investors should keep an eye on how these strategies unfold in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on SBC Medical's performance in the comments below.